Welcome to Introduction to Business 121, online, offered by the College of Lake County, utilizing Blackboard course management system 800 series. My name is Dr. George Mochocki. This week we'll be covering three interesting chapters on finance, credit, and financial management. Chapter 17, which is accounting. Read that carefully because you're going to need the statements for your business plan. Chapters 18, which is financial management. We all are financial managers, and you'll find out after you read the chapter. And I moved chapter Appendix D, personal finance, and I tied this in. I was going to do it the next week, but it makes sense to put it all together. And this one we're going to be talking about the 5 C's of credits and some other information. Okay, so those are the three chapters we'll be covering this week. We'll have 2 forums. We have the Connect to Connect homework and your regular quizzes. Okay, so let's go first of all real quickly into chapter 17, accounting. Now, chapter 17, accounting, what I want you to understand is that accounting is the core of most financial decisions. So accounting basically gives me the raw data, the raw numbers. So when I look at accounting, I take this information that I've learned from accounting and I utilize it when I make my financial decisions. So a real quick analogy, look at as accounting as a scale. And finance manager is as a dietitian. So when I go on the scale, it tells me how much I weigh, whether I like it or not. This is you're overweight or there's some issues. So that's what the scale, that's what accounting tells me. Raw numbers, this is actual numbers. This is how much your revenue is. This is how much your equity is. This is how much your expenses are. Like it or not, these are what the numbers come out. Now finance, like the dietitians, will take those raw numbers and they'll change it. They'll say, we'll change these ratios. If you do this kind of capital budgeting, if you do some of this will change basically the outcome. So after I do all this, just like a dietitian, I come back into my on my scale and say, oh yes, I did change, or I did improve by utilizing the techniques or the plan that the financial managers did. So remember, accounting is the raw numbers, no way around it. It's usually dry, and a lot of people find it difficult because it's very rigid, and it has to be precisely the way it's set up to follow approved accounting procedures. So when I look at my accounting books, or the government looks at the accounting books, it's consistent across all businesses, accounting books in that category. Okay, so what else are you going to learn? You're going to learn in this chapter a little difference between bookkeeping, know the difference between a managerial accounting. Managerial accounting is the accounting aspects that improves the process. That information is what where the money's at. That information may say if you outsource and you save 1 penny overall, by the year of the end we should save $2 million worth of savings because of this change. Okay, so remember, managerial accounting is within the organization to help the process to reduce the cost, the expense size. The next one, financial accounting. Financial accounting, you look at your annual books. This is the information that we present to the outside public. So when they're trying to invest in our company and they look at it, they look at our financial books and they say, oh, everything else is in order. I see where the company is. I have a general financial idea of how this company is structured and how they are basically making profits or losing money depending on their financial plan. So that information is in the annual report. Now, auditing. As an investor, how do I know that the books are not manipulated or something else? We have an independent auditor. What happens with auditing, they'll come in and they'll look at the books and make sure that everything is recorded properly. There is no ambiguity about any of the numbers. Everything's actual, factual. So now as an investor, I can say, yes, this company is making a profit. Yes, this company does have this amount of capital investment. Then you're going to look at the 3 statements out of this one that you have to be aware of because you're going to be including them in your business plan. Is your income statement. That basically tells me how much revenue is coming in and how much profit we're making off that revenue. You have your balance sheet that basically tells me my assets versus my liability. Assets are things that I actually own or have possession of. Liabilities are like the banks or the notes or everything else that I owe other people. So when I subtract my assets from my liability, I will get my net worth, or in business we call it owner's equity. Okay, so remember that formula. The next one you're going to have is the statement of cash flow. Statement of cash flow just tells me how much money I have on hand to pay my daily bills. If I don't have a proper cash flow, most businesses fail, not because they don't have a good idea, it's just that they don't have a good cash flow and they're not containing the expenses. Okay, so those are the three statements, and the other one you be looking at is the ratios. Make sure you look at the profitability ratio, the current ratio, activity ratios. Now ratios are like a real quick overview of what the company's going. It's taking two numbers and it gives you a ratio or probability. So when I look at the ratios, remember the ratios, when you're looking at ratios, when you're looking at Walmart, their ratios have to be compared to other businesses similar to Walmart's, like Target or I want to say like Kohl's or Myers. Not Kohl's, like Myers. So when you're comparing the ratios make sense when it's compared to someone within the same industry. Walmart's ratios would not make any sense to a car dealer's ratio. The two numbers would be completely different and the ratios will be different. Okay, so that takes care of chapter 17. The next chapter we're going to talk about is financial manager. Remember, I explained what's the difference between finance and accounting. As a financial manager, here's the numbers, here's where we're at. How am I going to bring extra capital, or how am I going to have money available for a new project line? So basically when I look at financial management or chief financial manager, he or she's the one who brings money in, looks if, do we take a loan, do we bring in more partners, do we sell stocks or shares. So they're looking at long-term financing, that anything over a year, and they're also looking at short-term financing. That could be my accounts receivable, anything under a year. They look at the operating budget to make sure we have enough money going forward. They look at different budgets. They have financial controls. When I look at financial controls, I have a budget. How close am I to that budget? That's how I control it. Let's see what else we have. Role of a financial manager, top financial concern is how to make the annual report numbers look well, how to keep up and make sure I have a adequate cash flow, make sure my inventory is doing well, make sure I look at both the expenses and the revenues coming in is what a financial manager does, and he plans in the future, how do I get more capital or finances coming in. So that's financial management. The next one, the last chapter, or the first chapter, depends how you read it, is Appendix D. It looks at the personal finance as an individual. What I want you to understand that businesses are also need the same kind of requirements as you do for your personal credit or personal finance. You have to go for a mortgage, businesses have to go for a mortgage. You have a credit score, businesses have a credit score. So everything you're learning here, if you understand your own personal finance, you'll be able to understand the business finance. The only difference is we may call it a little bit different. There's a lot more money involved in that, but they operate similar to your personal finance and your business finances are similar. So you're looking at the 5 C's of credit, character, capacity, everything else. Same thing when I look at a business. I have to understand the 5 C's of credit. So I look at a 401 plan is basically for my employees, IRAs, individual retirement accounts is to reduce the liability, tax liability, just like in business. Do I invest in mutual bonds? Do I invest in treasury notes? Whichever one is going to give me the highest return on my interest, or if it may be a low return on interest, but I get a tax credit, so I could write that off. So bottom line is my tax liability to the government has been reduced legally. Okay, you look at annuities, and look at annuities as how do I save money. In business, I do have annuities to pay off bonds. We call it sinking the funds, or I retain the earnings. Or if I look at interest rates, they're basically kind of an annuities with a compound interest, same kind of rationale, only utilizing a different type of an instrument to utilize the same kind of conceptual ideas. Compound interest I utilize this in an annuity. So I put so much money now, so when my bonds are coming up or my debt's coming up, I have money already on hand and I'm making money on money. Remember, in business, when we look at finances or anything else, in business, we're always making money on money. We just don't keep the money and sitting there. We put the money, so we're making some money on that. Okay, so we have those 3 chapters. They're going to be very interesting. Remember, I want to start looking at the next week. We're going to be working on our business plans specifically, because you have one more week. Next week, your business plan is going to be due. So you're going to have the one forum that is going to look at credit, your credit report, your credit scores for a personal asset perspective, but that also will pertain to my business. You're going to be looking at, that's the one thing, at student loans. What are the rules and conditions? Because that's basically what a chief finance does. He's looking at not only getting the best deal, but looking at the conditions and the terms and conditions of the contractual agreement to get that thing, to make sure that in the future, if I have to adjust, I have some leeway or some ways to be able to reduce my expenses as a debt. The last one, and then I'm going to give you a mini form, which is basically going to ask you about the 3 statements that you have to put into the business plan. Remember, I am not that concerned about the numbers. I am more concerned about the different aspects. In a business plan, you're gonna see business plan information. You're gonna see an info section on an income statement. So you're going to give me a 1-month income statement, one balance sheet for the month, and 1 cash flow for the month. You can do it for the year if you're going to be opening up the business, but right now, this is a condensed class, I'll be looking for 1 month. Okay, so that's basically it. Then you have your Connect. You will have your Connect homework's going to be on chapter 17 and 18 toward 20 points, and then you have your quiz is going to be on chapter 17, which is accounting, and a personal finance Appendix D. So you'll have 2 forums, you'll have your Connect, and then you have your quizzes at the end, and we're almost wrapping up. You only have a couple more weeks. You've made it so far. You're doing well in the forums, you're doing well in the quizzes, you're doing well in the Connects. Let's get this business plan done, and then you'll have time for next, get this forum done, get everything ready, start putting your pieces together. Next week, the only forum it's going to be is on your business plan, and you'll be preparing the business plan and turning that in at the end of next week. And then the following week, you're just going to have your final. It's going to be from Sunday to Tuesday, I think. So anyway, my name is Dr. George Mochocki. This week we'll be covering 3 chapters. Chapter 17, accounting. Chapters 18, financial management, and Appendix D on personal finance. You have a Connect homework worth 20 points. Both forums are worth 25 points, and then you have a quiz on chapter 17 and 18. And before you know it, in a couple of weeks you'll be relaxing, and this class will be over, and you'll get the grade that you deserve. So again, I'll see you in the forum. My name is Dr. George Mochocki. This is Introduction to Business 121 800 series. Goodbye.